This is Scott Whitwam with your morning real estate investor update. And today's top story, aging America. As America's population ages, their demand for housing is changing. Many investors are considering the viability and increased demand added by remodeling homes with a number of considerations. The reality is that both buyers and renters are seeking accommodations that favor their health and activity levels. This includes considering wider hallways, doors, open floor plans, and fewer steps. Having a universal design that gives the ability for people to live safely and comfortably no matter their age or their stage of life is very important. Organizations like AMAC have information to aid in the aging population's home selection. Investors may be well advised and find additional revenue in making their offerings to a broader clientele with some of these considerations upon their acquisitions. Anytime you have a property that you can increase the demand for, you will increase the return on investment. Today's mortgage rate update, it's all about the Benjamins. Okay, I've used that one before, but it's still true. Rates continue to fall, allowing buyers to keep the Benjamins in their bank. 30-year rate mortgages haven't been this low since February of 2023. And this is good news with high inflation and an affordability index that shows the average American hurting from the poor economy. And now with the Federal Reserve looking to pretty much certainly be cutting the Fed rate next week, it has driven mortgages closer to the 19-month low. According to Bankrate, the 30-year fixed mortgage rates are down this week to 6.25%. But according to Bankrate's survey, many prospective home buyers are still waiting for rates to fall further, as 40% of current homeowners said they need rates to be around 5% to feel comfortable with buying a home this year. In today's wrap-up, the hottest U.S. housing markets. As interest rates begin to decline, we will likely begin to see a variety of locations experiencing activity at different levels. As investors, being active in markets with higher stimulation of housing sales should ultimately lead to higher profits in the coming months. In a recent U.S. News and World Report article, they used their housing market index data to assess the current hot markets. The data find what markets in the housing sector are considered hot. The data may seem very simple, like basic supply, demand, financial considerations. What the hot markets appear to have in common are amenities unique to culture without the high cost of housing typically associated with the East and West coasts. The 5 hottest markets were Austin, Texas, Kansas City, Missouri, Philadelphia, Pennsylvania, Omaha, Nebraska, and Houston, Texas. Be sure to subscribe to the Morning Real Estate Investor Update and catch me on the weekly Whitwam Wealth Real Estate Podcast.